Post-IPO Equity Research Report, NASDAQ Lime. Neutron Holdings Inc., the last survivor of the scooter wars, goes public. Report date, July 18, 2026. Trading began July 1, 2026. Offer price, $25. Gross proceeds approximately $174 million. Implied valuation, approximately $1.7 billion. Shares offered, 6,956,522. FY 2025 revenue, $886.7 million. FY 2025 adjusted EBITDA, $218.1 million. Cities, approximately 230 across 29 countries. Section 01, Executive Summary. Neutron Holdings Inc., NASDAQ Lime, operating under the consumer brand Lime, is a Delaware corporation headquartered in San Francisco, California, and is the world's largest shared micromobility operator, providing on-demand electric scooter and electric bike rentals across approximately 230 cities in 29 countries. Founded in January 2017 by Toby Sun and Brad Bao as Lime Bike, the company completed its initial public offering on the NASDAQ Global Select Market on July 1, 2026, becoming the first major shared micromobility company to reach public markets since rival Bird's unsuccessful 2021 SPAC listing and subsequent 2023 bankruptcy. Lime's core strategic identity is that of a vertically integrated mobility platform. It designs its own vehicle hardware, builds proprietary IoT and software systems, operates a global fleet servicing organization, and maintains a dedicated government relations function to manage the municipal permitting that its business model depends on. This full-stack approach is management's stated explanation for why Lime survived the sector-wide shakeout that has consumed roughly $10 billion of invested capital since 2015 and claimed most of its early competitors. The IPO priced at $25 per share, the midpoint of the $24 to $26 marketed range, with the company and certain selling stockholders together offering 6,956,522 shares. Shares opened approximately 8% above the offer price and closed the first session near $26, implying a market capitalization commonly cited in the range of $1.6 to $1.8 billion. Demand reportedly ran to roughly 6 times the shares available, with the 10 largest investors receiving more than 75% of the allocation. IPO key highlights. Shares offered, 6,956,522 total, of which 6,679,791 primary and 276,731 secondary. Price range, $24 to $26 per share, priced at $25. Gross proceeds, approximately $174 million. Over-allotment option, up to 1,043,478 additional shares. Net proceeds to company, approximately $141.6 million at midpoint, approximately $165.8 million if option fully exercised. Implied market cap at debut, approximately $1.6 to $1.8 billion. Exchange, NASDAQ Global Select Market. Lead underwriters, Goldman Sachs and J.P. Morgan. Anchor shareholder, Uber Technologies, approximately 22% post-IPO stake. Financial snapshot. FY 2025 revenue, $886.7 million, up 29% year-over-year. Fiscal 2025 adjusted EBITDA, $218.1 million. Fiscal 2025 net loss, negative $59.3 million. Q1 2026 net loss, negative $61.3 million. The investment narrative surrounding Lime's debut is genuinely two-sided. On one hand, the company has demonstrated a real operational turnaround since the pandemic-era collapse of its private valuation from $2.4 billion in 2019 to roughly $510 million in 2020. Revenue nearly doubled from $522.0 million in 2023 to $886.7 million in 2025. Adjusted EBITDA more than doubled over the same period, and the company generated $103.8 million of free cash flow in 2025. On the other hand, the IPO was in substantial part a defensive balance sheet transaction. Lime's S-1 disclosed a going concern qualification tied to approximately $845 million of debt maturing within 12 months, and roughly $115.0 million of net proceeds were earmarked specifically to retire the company's senior secured term loan. Investors evaluating Lime shares should weigh both narratives carefully. Section 02. Company Overview. Legal entity, Neutron Holdings, Inc., Delaware Corporation. Brand, Lime, formerly Lime Bike. Headquarters, San Francisco, California. Exchange and ticker, NASDAQ Global Select Market, ticker Lime. Website, li.me. Year founded, 2017, as Lime Bike. Co-founders, Toby Sun and Brad Bao. Chief Executive Officer, Wayne Ting, CEO since May 2020. Chairman, Brad Bao, co-founder. Operating footprint, approximately 230 cities across 29 countries as of year-end 2025. Largest strategic shareholder, Uber Technologies, Inc. Mission. Lime states its mission is building a future for transportation that is shared, affordable, and carbon-free, positioning the company within the broader sustainable urban mobility and last-mile transportation category. According to company disclosures, Lime has facilitated more than 1 billion cumulative rides since inception. Corporate milestones. January 2017, company founded as Lime Bike by Toby Sun and Brad Bao, former Fosun International Venture executives. $12 million Series A, led by Andreessen Horowitz in March 2017. May 2019, co-founder Toby Sun transitions out of CEO role. Co-founder Brad Bao becomes CEO. 2019, private valuation peaks at approximately $2.4 billion amid sector-wide scooter wars funding boom. 2020, COVID-19 pandemic collapses ridership. Valuation falls to approximately $510 million in a recapitalization. Uber Technologies becomes a major shareholder, contributing its Jump Bikes and Scooters unit in cash. May 2020, Wayne Ting becomes CEO. 2022, company states it achieved its first full year of positive adjusted EBITDA and unadjusted EBITDA. December 2023, principal rival Bird Global files for Chapter 11 bankruptcy, later reorganized as Third Lane Mobility. May 2026, files Form S-1 registration statement with the SEC. June 22, 2026, launches IPO roadshow, applies to list on NASDAQ under ticker Lime. June 30, 2026, IPO prices at $25 per share. July 1, 2026, trading begins on NASDAQ Global Select Market. July 2, 2026, offering closes. Section 03, Products and Services. Vehicle Fleet. Lime designs its vehicles in-house and contracts third-party manufacturers for production. The fleet spans 3 vehicle categories. Electric tick scooters, Lime's original and most recognizable product line. Electric assist bikes or e-bikes, pedal bicycles with motor assistance, an increasingly important growth category. And seated electric scooters, a newer vehicle class combining scooter and moped-like characteristics. Each vehicle integrates proprietary IoT hardware and software, enabling GPS location tracking, remote diagnostics, geofencing for city-mandated parking and speed limit zones, and data collection used to guide fleet deployment and rebalancing decisions. Rider-facing application. Vehicles are located, unlocked, and paid for through the Lime mobile application. Riders can also access Lime vehicles through third-party surfaces, most notably the Uber app, under a long-standing commercial integration agreement between the two companies. Pricing models. Pay-as-you-go, per-ride unlock fee, plus a per-minute usage charge. Lime's original and still core pricing structure. Lime Pass. Bundled minutes packages purchased in advance, offering a discount versus standalone pay-as-you-go pricing. Lime Prime. Subscription-based membership offering reduced per-ride costs and other rider benefits for a recurring fee. Operations model. Lime service is dockless, meaning vehicles are parked within designated zones rather than fixed docking stations. Lime operates a tech-enabled logistics and maintenance network responsible for charging, repositioning, cleaning, and repairing vehicles across each market. Distribution channels. Beyond its own app, Lime vehicles are accessible directly through the Uber Rider app, under an integration agreement management has said runs through 2028. This channel accounted for approximately 14.3% of total revenue in 2025. And approximately 14.0% in Q1 2026. Section 04. Business Model. Core Model. Vertically integrated mobility as a service. Rather than outsourcing hardware design, software, field operations, or municipal relations, Lime keeps each function in-house or under direct contract. CEO Wayne Ting has repeatedly framed this full-stack approach as the central reason Lime survived a sector shakeout that eliminated most of its early competitors, stating the goal was to ensure profitability at the city level, at the scooter level. Revenue streams: pay-as-you-go rides, unlock fee plus per-minute charges, the largest and most direct revenue stream. Lime Pass and Lime Prime, prepaid minute bundles and recurring subscriptions that improve rider retention and revenue predictability. Uber channel rides, revenue generated when riders access Lime vehicles through the Uber app, approximately 14% of total revenue in 2025 and Q1 2026. Unit economics, management disclosed metrics. Gross margin at the vehicle level, above 50%. Vehicle payback period under 1 year on average. Stated vehicle operating life 5 or more years, implying approximately 4 to 5 times cash return per vehicle. Revenue per vehicle per day in 2025, approximately $7.47. Average operational fleet size in 2025, approximately 325,137 vehicles. Average monthly active users in 2025, approximately 3.8 million. Management has stated that incremental growth is intended to come primarily from increasing vehicle density and utilization within existing cities, rather than from proportional increases in marketing spend. Because Lime's ability to operate in a given city is generally contingent on a municipal permit, the company maintains a dedicated government relations function as part of its stated vertical integration strategy. Management treats this as a structural competitive advantage over smaller or less capitalized rivals. Key strategic partnership: Uber Technologies. Uber became a major Lime shareholder in 2020, contributing its Jump bikes and scooters assets, along with a cash investment. Uber's post-IPO stake is cited at approximately 21.9 to 22%. Lime disclosed paying Uber approximately $15.0 million in service fees under their commercial arrangement in the most recently reported fiscal year. Section 05. Industry and Market Analysis. The shared micromobility sector has moved from a venture capital-fueled land grab in 2018 and 2019 through a painful multi-year consolidation to what Lime's IPO represents, the first large-scale public market test of the category's viability. Market sizing. Serviceable addressable market, currently, approximately $6.1 billion. SAM at approximately 30% category adoption, approximately $12.0 billion. Long-term total addressable market, approximately $69.1 billion with further geographic expansion. These figures originate from company-provided estimates within IPO marketing materials and should be treated as management projections rather than independently audited figures. Market position. Per company disclosures, Lime holds approximately 27% market share across the countries in which it operates, and approximately 37% within the United States. Among dockless offerings, the company cites approximately 35% global share and approximately 48% U.S. share. Industry structure and consolidation. The broader micromobility category burns through approximately $10 billion of invested capital since 2015, with numerous operators filing for bankruptcy. The most prominent casualty was Bird Global, which filed Chapter 11 in December 2023 and reorganized as Third Lane Mobility. Other competitors exited through mergers, spin sale to Tier Mobility, and the operational tie-up of Voi and Dot across parts of Europe. Lime is widely described as one of the few large-scale survivors of this consolidation. Secular demand drivers. Expansion of protected bicycle lane infrastructure in major cities. Congestion pricing programs in dense urban centers. Low emission and car restriction zones. Consumer shift toward lower cost, lower carbon short-distance urban travel. Regulatory sentiment is not uniformly favorable, however. Paris notably banned rental scooters following a 2023 municipal referendum. Named competitors: Bird and Third Lane, Bolt, Neuron Mobility, Beam, Voi Technology, Dot, Tier, HelloRide, Lyft, Dock Systems, and Uber. Partner and investor. Section 06. Financial analysis. Annual financial summary. FY 2023 through FY 2025. Revenue: $522.0 million in 2023, $686.6 million in 2024, $886.7 million in 2025. Revenue growth: approximately 32% in 2024 and approximately 29% in 2025. Gross profit: $169.2 million, $281.1 million, $345.4 million. Adjusted gross profit, $276.3 million, $368.6 million, $467.2 million. Operating income or loss, negative $24.6 million, positive $47.0 million, positive $70.4 million. Net loss, negative $122.4 million, negative $33.9 million, negative $59.3 million. Adjusted EBITDA, $99.8 million, $153.4 million, $218.1 million. Not disclosed for 2023, $47.3 million in 2024, $103.8 million in 2025. Quarterly snapshot, Q1 2025 versus Q1 2026. Revenue, $129.0 million versus $170.2 million, approximately 32% year-over-year growth. Gross profit, $28.9 million versus $44.6 million, approximately 54% growth. Adjusted gross profit, $56.5 million versus $74.2 million, approximately 31% growth. Net loss, negative $56.0 million versus negative $61.3 million, wider loss. Adjusted EBITDA, $2.1 million versus $7.5 million, approximately 250% growth. Operating loss, negative $31.4 million versus negative $29.0 million, narrower loss. Balance sheet and liquidity. As of March 31, 2026, Lime reported cash and cash equivalents of approximately $261.3 million against approximately $845.8 million of principal debt payments coming due within 12 months. A mismatch that, absent completion of the IPO and an associated refinancing, raised substantial doubt about the company's ability to continue as a going concern. The company stated it intended to use approximately $115.0 million of net proceeds to fully repay its senior secured term loan. Disclosure flag material weakness. Lime's S1 disclosed a material weakness in internal control over financial reporting. The company has stated an intention to remediate this weakness, but as of the filing, remediation had not been completed. Post-IPO trading metrics. Shares opened at approximately $27 on debut, approximately 8% above the $25 offer price, and closed the first session around $26. Cited market capitalization figures range from approximately $1.6 billion to approximately $1.8 billion. Section 07, IPO Details. S1 initial filing, May 7 to 8, 2026. Roadshow launch, June 22, 2026. Pricing date, June 30, 2026. Trading commenced, July 1, 2026. Offering closed, July 2, 2026. Offer price, $25 per share, midpoint of the $24 to $26 range. Total shares offered, 6,956,522 shares. Shares sold by company, 6,679,791 shares. Shares sold by selling stockholders, 276,731 shares, including CEO Wayne Ting, President Joseph Kraus, and co-founder Brad Bao. Over-allotment option up to 1,043,478 additional shares. Net proceeds to company, approximately $141.6 million at midpoint, approximately $165.8 million if option fully exercised. Lead book running managers, Goldman Sachs and JP Morgan. Additional underwriters, Jefferies, Evercore ISI, Citizens Capital Markets, KeyBank Capital Markets, Needham & Company, and William Blair. First day open and close. Opened approximately $27.90, closed approximately $26. Implied valuation, approximately $1.6 to $1.8 billion. Lockup general approximately 160 days. Lockup Uber, separate, staggered lockup of up to approximately 2 years on Uber's pre-offering shares. Use of proceeds, approximately $115.0 million to fully repay the outstanding senior secured term loan. Approximately $4.8 million and $2.8 million for tax withholding obligations tied to RSU settlements. Remaining proceeds for general corporate purposes. Demand and allocation. Order demand ran to roughly 6 times the shares available, and the 10 largest participating investors received more than 75% of the shares allocated. Analysts note, a rescue financing character. Unlike a typical growth capital IPO, Lime's offering was structurally necessary to resolve a going concern qualification and refinance near-term debt. Investors should distinguish this defensive use of proceeds from the more common fund expansion rationale seen in many technology IPOs. Section 08, Competitive Analysis, Competitor Overview. Bird and Third Lane Mobility, reorganized post-bankruptcy, former largest direct rival. Bolt, private, direct competitor in European markets. Neutron Mobility Beam, private, primarily Asia-Pacific and international. Voy Technology, private, direct competitor primarily in Europe. Dot Tier, private, direct competitor in Europe. Hello Ride, private, direct competitor. Lyft, public, competitor in select markets with docked model. Uber, public, largest shareholder and distribution partner, not a direct competitor. Lime is consistently described as differentiated by three factors. 1. Vertical integration across hardware, software, operations, and government relations. 2. Global scale across roughly 230 cities and 29 countries. And 3. A long-standing commercial partnership with Uber, providing distribution beyond Lime's own application. The competitive field has narrowed considerably since the 2018 to 2019 boom, with the exit or consolidation of Bird, Spin, and the Voy and Dot European tie-up. This is a double-edged consideration, reduced direct competitive intensity in many markets, but also a reflection of the sector's historically difficult unit economics. The Uber relationship, key strategic dependency. Uber Technologies is Lime's most significant strategic and financial relationship. Uber became a major shareholder in 2020 by contributing its Jump bikes and scooters unit and a cash investment. Uber's post-IPO ownership is cited at approximately 21.9 to 22%. Riders access Lime vehicles directly through the Uber app under an integration management has said runs through 2028, though Uber reportedly holds a unilateral right to terminate the arrangement at any time. This channel contributed approximately 14.3% of Lime's 2025 revenue and approximately 14.0% of Q1 2026 revenue. Section 09, Management Team. Wayne Ting, Chief Executive Officer. Wayne Ting has served as CEO since May 2020, having joined Lime in October 2018 as Global Head of Operations and Strategy. He holds a BA from Columbia University and an MBA from Harvard Business School. Prior to Lime, he spent over 4 years at Uber Technologies, including as Chief of Staff to CEO Dara Khosrowshahi and General Manager of Uber's Northern California business. Earlier in his career, Ting served as a senior policy advisor on the White House's National Economic Council under President Barack Obama, focused on housing finance reform, and held roles at Bain Capital and McKinsey & Company. He also co-founded CampusNetwork.com, an early college social networking site. Under Ting's leadership, Lime stated it achieved its first fully profitable year on both an adjusted EBITDA and unadjusted EBITDA basis in 2022. Brad Bao, co-founder and chairman. Brad Bao co-founded the company alongside Toby Sun in January 2017 and served as CEO from May 2019 until Wayne Ting's appointment in May 2020, at which point he transitioned to chairman. Bao was previously a longtime executive at Tencent. He was among the selling stockholders in the IPO. Toby Sun, co-founder. Toby Sun co-founded the company with Brad Bao in January 2017 and served as founding CEO until May 2019. Prior to Lime, Sun was an investment director at Fosun Kinzon and earlier worked at PepsiCo and Deloitte. He holds a bachelor's degree in public policy from Sun Yat-sen University and an MBA from UC Berkeley's Haas School of Business. Joseph Kraus, President. Joseph Kraus serves as president of Neutron Holdings and was among the selling stockholders in the IPO. Section 10. Key risk factors. Risk 1. Liquidity and going concern history. Prior to the IPO, Lime disclosed approximately $845 million in debt principal payments coming due within 12 months, against roughly $261 million of cash on hand. A mismatch significant enough to generate a going concern qualification. While IPO proceeds were used to repay the senior secured term loan, the company entered public markets under real balance sheet pressure, rather than from a position of financial strength. Risk 2. Continued GAAP net losses. Lime has not achieved GAAP profitability. Net losses widened from $33.9 million in 2024 to $59.3 million in 2025, and the company posted a $61.3 million net loss in Q1 2026 alone. Positive adjusted EBITDA and free cash flow do not equate to GAA profitability. Risk 3. Municipal permit and regulatory dependence. Lime's ability to operate in any given city typically depends on a permit or regulatory authorization that can be modified, restricted, or revoked. Paris's 2023 referendum banning rental scooters is the most frequently cited example of a major market closing to the category entirely. Risk 4. Seasonality and weather sensitivity. Ridership is seasonal and weather dependent, with usage fluctuating meaningfully across quarters, reflected in Lime's comparatively modest Q1 adjusted EBITDA relative to full-year figures. Risk 5. Capital intensity. The business requires continuous capital investment in vehicle fleets with finite operating lives, requiring ongoing maintenance, charging, and repositioning infrastructure, exposing Lime to depreciation, damage, theft, and vandalism costs atypical of software-only platforms. Risk 6. Uber counterparty and competitive risk. Lime's reliance on the Uber distribution channel, approximately 14% of revenue, carries counterparty risk. Uber reportedly holds a unilateral right to terminate the integration agreement at any time, notwithstanding a stated contract term through 2028. The competitive landscape, while consolidated, remains active across Bolt, Voy and Dot, Neuron and Beam, and Lyft's dock systems. Risk 7. Internal control material weakness. Lime disclosed a material weakness in its internal control over financial reporting in the S1. Unremediated material weaknesses can affect the reliability of financial statements and may draw scrutiny from auditors, investors, and regulators in post-IPO reporting periods. Risk 8. History of extreme valuation volatility. Lime's private market valuation fell from approximately $2.4 billion in 2019 to approximately $510 million in 2020, an approximately 79% decline in roughly 1 year amid the COVID-19 pandemic. This history underscores that current post-IPO valuation levels are not necessarily insulated from similarly sharp swings under adverse macro conditions. Risk 9. Limited post-IPO analyst coverage. Research coverage may be limited in Lime's early period as a public company, which could affect trading volume and price discovery relative to more heavily covered peers. Section 11. Post-IPO growth catalysts. Catalyst 1. Deleveraged balance sheet, with the senior secured term loan repaid and several convertible note series converted to equity. Lime enters public markets with materially reduced near-term refinancing risk, a more stable capital structure to support continued scaling. Catalyst 2. Density-led growth in existing markets. CEO Wayne Ting has identified increasing vehicle density within already served cities rather than pure geographic expansion as a primary near-term growth lever, citing improving utilization and revenue per vehicle metrics. Catalyst 3. E-bike category expansion. Lime's e-bike segment represents a meaningful growth opportunity, given projections of the global e-bike market growing from approximately $65.8 billion in 2026 to approximately $193.2 billion by 2034. Catalyst 4. Municipal permit stability and franchise-like contracts. If cities increasingly treat shared micromobility permits more like stable, longer-duration franchise arrangements rather than short-term pilot programs, Lime's revenue base could become more predictable over time. With Bird's exit from independent operation and further European consolidation, Lime faces a narrower competitive field in many core markets than existed during the 2018 to 2019 boom, potentially supporting improved pricing power and market share retention. Catalyst 6. Uber distribution channel expansion. Continued integration with the Uber app provides an existing, large-scale distribution channel that management credits with meaningful rider acquisition without proportional direct marketing spend. Catalyst 7. Broader IPO market recovery. Lime's listing occurred amid a broader 2026 recovery in the U.S. IPO market. A continued healthy capital markets backdrop could support Lime's future access to capital and secondary trading liquidity. Section 12. Conclusion and investment considerations. Neutron Holdings Lime IPO is a landmark event for the shared micromobility sector, the first major public listing from the category since Bird's unsuccessful SPAC-driven debut, arriving after Lime spent several years demonstrating improved unit economics, positive adjusted EBITDA, and positive free cash flow. The offering was met with strong institutional demand, reportedly around 6 times the available share count, and shares traded up modestly on debut, closing near $26 against a $25 offer price. At the same time, the transaction's core function was defensive rather than purely opportunistic. Lime needed the IPO to refinance approximately $845 million in near-term debt obligations and resolve a going concern qualification in its financial statements. The company remains GAAP loss-making, operates a capital-intensive and seasonal business model, and depends heavily on continued favorable regulatory treatment across dozens of individual municipal jurisdictions, as well as on the durability of its commercial relationship with Uber. For content and analysis purposes, Lime's public debut is best understood through 2 simultaneous and somewhat conflicting narratives. A genuine operational turnaround story, evidenced by improving revenue growth, margin expansion, and cash generation since the depths of the pandemic-era valuation collapse, and a rescue financing story, evidenced by the going concern language, material weakness disclosure, and immediate use of proceeds to extinguish debt rather than fund new growth. Which narrative proves dominant will likely depend on whether Lime can convert its improving adjusted EBITDA trajectory into sustained GAAP profitability and on how the regulatory environment for shared micromobility evolves across its largest markets. Summary assessment. Bull case. Revenue growth and adjusted EBITDA continue their multi-year improvement trajectory. Density-led expansion drives GAAP profitability within a reasonable time frame. Municipal permits stabilize into longer duration contracts. The Uber partnership continues uninterrupted. Sector consolidation supports pricing power. Lime converts its last survivor position into a durable, profitable public company. Debt-driven going concern history proves symptomatic of deeper structural unit economics issues. A major city or cities restricts or bans the category. Uber terminates or deprioritizes the integration. Seasonality and capital intensity keep the company GAAP loss-making indefinitely. The stock trades down from its debut levels as the rescue financing narrative dominates the turnaround narrative. Bottom line, for investors and content creators covering micromobility, Lime represents a uniquely instructive case study, a category survivor with real operational improvement, arriving at the public markets primarily to fix its balance sheet rather than to fund growth. Readers and viewers are encouraged to review the complete prospectus on SEC EDGAR, particularly the full risk factors, financial statements, use of proceeds, and lockup disclosures, before drawing investment conclusions.